welcome. You're watching Buy Now, Sell Now. I'm with you, Kavita, and with me is my colleague, Nupur. And next 1 hour is going to be all about your stock-specific questions. So do not delay. In case you're watching the show live and want to connect with us, we will flash a QR code on your screen right now. You just need to scan the code and you'll be connected to a WhatsApp number. Do send across your question. Write down the name of the stock, the price at which you bought it, and the timeline till when you want to be invested in that stock. We'll get you a technical as well as fundamental take from our experts live on the show. You can talk to them and discuss about your investments. Buy Now, Sell Now, the only show that takes care of all your stock-related queries and investments. Let's look at the market, where the market is extending the losses on Thursday, and it's pretty range-bound on the Sensex and Nifty, but definitely small caps are outperforming. Small cap 100 almost 0.25% up. From a technical perspective, it's very important. The level of 24,500, a key resistance level for Nifty. Heavy call open interest at its strike in the options chain suggests strong selling pressure with the level shifting from support to resistance. But look at the sector specific. Banking almost down 0.5% in terms of the bank Nifty. Mid caps too are almost 0.25% down. Overall sectors, FMCG flat in green right now, but no, not much momentum. We can look at reality doing good in today's trade so far with 0.5% upbeat on the index. Media almost 0.75% up, and defense. This is one sector that's almost 0.5% up. So a lot of stock specific action in the market as well that we'll be focusing on. But then let's move on, and Sebi is considering allowing foreign portfolio investors or FPIs to participate in India's commodity derivatives markets, a move aimed at bringing greater participation, liquidity and depth to the segment. The Multi-Commodity Exchange of India, MCX, has welcomed the proposal, saying a wider investor base can help create healthier and more diverse commodity markets. Our colleague Akansha spoke to MCX MD and CEO Pravina Rai about the proposal.
For healthy markets and to really increase the diversity and depth of markets, it's very important to have wide range of participants, a diverse category of participants. So at MCX, we really welcome this move, this consultation paper for FPIs to participate in the Indian commodity markets beyond where it is today. Now, we've gone through the paper, of course, and the solution is a very elegant one because bringing in the participation in a manner that that stops short of really having an FPI actually get into any form of giving or taking delivery is really very elegant in the way the position transfer takes place. Now, to note here is the actual contracts traded, are deliverable contracts. And delivery is very important because it creates the actual price integrity, where exchange discovered price on a futures contract merges and converges with the actual spot price. So this retains the price discovery, the integrity of price discovery, while also bringing in this new participation category without bringing in a nature of any sort of resident behavior.
And now on to the part of the show where viewers are waiting to hear advice. And to advise them, we now got Sharmila Joshi. She's a fundamental analyst joining us. Also, Kunal Bothra is with us in the studios. Good morning, both of you. Thank you for being with us. All right, and let's not waste time. Let's get on with it. The first question that we have is coming in from Bengaluru, and this one is from Srinivas Murthy. The stock that he is wanting your view on is Pondy Oxides and Chemicals, holding about 100 shares of that. The entry price was 520 rupees, and he wants a sort of a long-term horizon. So, Sharmila, what's your view on it? The stock, doing quite well today, almost 2.35% up. So, what's your sense? Should he hold?
Yes, I think he needs to continue to hold the stock. The valuations seem reasonable. The numbers are also, to my mind, quite satisfactory. So there is really no reason to exit the stock in a hurry. So if you have the ability to hold, just looking at the numbers as well as the valuation, the stock is over.
All right, let's move on and let's take this question from Abhijit Gupta. He's from Kolkata. The stock is IDFC First Bank and the entry price is 84. Wants to know for how long can he hold the counter. Okay, Kunal, I'll just take a technical take, and if at all there's a stop loss that you want him to put for short term.
See, if the time frame is short term, then I would suggest that keep a stop loss of around 81.5, 82 for IDFC First Bank, because that's the support of the gap the stock had created almost like a couple of weeks back. But look at it this way, with the kind of news flow which had happened for IDFC First Bank almost 5-6 months back, I think in the month of Jan-Feb, when that news flow led the stock into a major correction from 86 levels to sub 60 mark. The stock has almost recovered fully from those 20-25% plus correction for IDFC First Bank. So I think it's a very strong stock on the longer term charts. Short term wise, you might probably look at 88 as a near term target for IDFC First Bank. But if you can hold on to the longer term time frame, I think the risk reward at the current juncture is still very attractive.
Right, and we stick on to the banking segment. The next question also coming in from Rajesh, writing in from Noida. He's got another heavyweight banking stock that he wants to know about. That one's HDFC, holding 10,000 shares. The entry price was 765. So he doesn't tell us whether he wants to hold it for the long term or the short term. But let's go across to Sharmila on this one, and then maybe Kunal, you can pitch in as well. So Sharmila, what's your take on this one?
Well, for me, it's a hold. I think the only from the investor looking at from the investor's point of view, he has a large holding in HDFC Bank. And I think the numbers sort of disappointed. The quarter numbers disappointed, and it's been a bit of a rough ride for HDFC Bank ever since they announced their merger with HDFC, and subsequent numbers haven't fallen in, etc. But I think that the combined conglomerate of HDFC and HDFC Bank, I think we haven't seen the positives of that really play out as yet, not in the numbers and certainly not in the stock price. So I think if you have the patience, I would recommend a hold. But as I said, the quantity is large, so maybe you can take a technical view. But I think from a fundamental perspective, at this price point, it's a hold.
Right, absolutely. And that's why I'm going to go across to Kunal for a technical view. Kunal, what's your sense?
See, frankly speaking, on the charts, it's still looking very weak. I would sense that the stock can correct further. It's managed to break below a major support, the 750, 740 mark for HDFC Bank. And the bigger concern is that now that on the quarterly charts, the RSIs for HDFC Bank is at the lowest the stock has seen over the last, I think, 15 or 17 years for the stock price. So that could probably pull down the stock price maybe further over the next 3 months, 6 months. So from a medium term kind of a view, I would sense that the stock can correct further. So it's better that you have maybe some sort of a stop loss at play, depends on your risk reward, or if you're looking to hold on to the stock from a long term perspective and you want to ride out this phase of volatility, then maybe hedging this with a suitable put option could also be a good strategy in case you want to hold on to this stock from a long term perspective.
All right, let's move on. And this is Narayani from Coimbatore. The portfolio has too many stocks, so she wants to reduce the number of holdings. And also, she has shortlisted Grasim and Tube Investments. Is that a good strategy? She wants to buy more two stocks at the current level, if any recommendation. So let's take a short term as well as a long term view. Shamila, I'll come to you first. So I don't know the amount of stocks that she was holding, but she has come down to Grasim and Tube Investments. Are these two good to hold and other two to buy if at all you want to recommend?
So I haven't actually understood the query. I'm just answering whether Grasim and Tube Investments are worth holding on to. And to my mind, they're both good stocks, so you need to continue to hold both these stocks.
And she wants to buy two more stocks. I'm not sure about the time horizon, but two more names if you want to recommend.
So since we are talking, I don't have really perspective on what the other sort of stocks are, so I'll go with large cap names. I think, buy one defensive, so buy one pharma stock in that. I like Sun Pharma. But any of the, I think, large cap pharma is good. And I think buy maybe a four-wheeler because that's a space that's doing well. So maybe you could look at a Maruti or a Tata Motor passenger vehicle.
All right, Maruti or Tata Motors PV. Kunal, what's going to be your recommendation? Grasim and Tube, if at all you want to give a short-term target on that, and two more stocks to buy at what level?
See, I would suggest that it's a good time where, in fact, you can actually hold on to both Grasim as well as Tube Investments because, both of these stocks are individually at a, interesting point. Grasim, for example, is at a breakout point about the 3,000 mark. The stock has confirmed a breakout after weeks of consolidation. So, which means that potentially over the next, say 1 month, 3 months, the stock could be scaling up higher from the current levels. Looking at the chart setup so far, Tube Investments, interestingly, the stock has gone through a decent correction in the last 5 to 7 weeks, almost like a consistent correction. The stock has shown over the last 5-7 weeks. It's corrected from 3,300 to almost 2,700. So 20% correction is out for the stock price. The risk reward is now favorable for a bounce from the current level. So in either of the scenarios, I would suggest to hold on to both of these names as of now and maybe revisit the strategy in the next 1 to 3 months.
All right, so the next question is coming in from Sikandrabad. Murthy is writing to us, and it's a very generic sort of a broad question saying, is Blue Cloud Soft Tech Solutions a good long-term buy? So Sharmila, he wants to know about Blue Cloud Soft Tech.
I'm sorry, I've never covered this.
Okay, and Kunal, do you have coverage on this one?
No, not at all.
All right, I'm afraid. Oh, okay, but in any case, Kunal, if he were to buy in this sector, what would you recommend?
See, I'll look at this on a generic IT names, and from the IT stocks, I frankly believe it's a good time to try and accumulate stocks on the large cap, mid cap front, and there are some far better quality stocks. Even if, for example, you're looking at, say, the performing names like Coforge and Persistent, where we've been bullish on for the last 2.5 months. Both these stocks have done phenomenally well over this time span. They continue to look very strong and attractive. But if you're looking to try and buy a quality name, but at a slightly cheaper price, then I think KPIT Tech around the 600 mark or slightly below the 600 levels could also be an attractive stock to look at. It could be a very high beta. You'll have to be ready with facing some sort of a volatility. But then I think largely the IT stocks at the current juncture, both mid caps as well as a mix of large cap names, is what I would suggest to the viewer.
Okay. This question is coming in on WhatsApp from Neeta Gupta from Delhi. The stock is Shakti Pumps. Entry price is 537. And should I hold or take small loss and switch? Okay. Kunal, a short-term strategy. 537 is a buy price. She is in losses. Do you want her to wait?
I'll suggest to wait for maybe some more time. But I would suggest that maybe wait out for a point where the stock reaches at least 555, 575 kind of a zone. That could be a moderate target which you can look out for Shakti Pumps. But the only concern is that it's a very weak chart on the long-term basis. For the past 1.5 years, the stock has fallen quite dramatically from 1,300 levels. It first fell towards 750, which is a 50% odd correction for the stock. Then bounced off towards, I think, around 650 odd levels, and then fallen back again to the 500 mark. So long-term wise, the trend is still weak for Shakti Pumps, but it's just that on the short-term basis, I would expect the stock to maybe retest the zone of 550, 560, and then continue a phase of correction.
All right. So on that note, we're going to be slipping into a very short break. When we come back, of course, we'll continue to take all our viewers' queries to send your queries to the WhatsApp numbers that we've flashed earlier on the screen. You can also call us. We'll be taking those live.
Welcome back. You're watching Buy Now, Sell Now, where we're answering your stock-specific questions. And Kunal Bothra, Sharmila Joshi, our experts, are live with us. And we also have a live viewer from Ghaziabad, Janendra Shrivastava. Hi, good morning. How are you?
I'm fine, ma'am. I have 350 shares of Nykaa
Okay.
at the rate 333.4. But it is not moving.
Right.
When I purchase, it goes up to 343. But
Okay.
after that, it is still down.
Okay. So you want to still hold it for 6 months?
Yeah.
Okay. Kunal, would you recommend that time frame?
Well, I would recommend increasing the time frame if possible. I think it's an excellent chart. It's on the path of recovery from the post-listing point when I think Nykaa was almost 400, 425. The stock fell down to almost 125, so a decent 80% correction for the stock price, and now it's on the path of recovery for itself. I think the recent breakout in the news flow surrounding Nykaa has been positive. It's just that my only concern is that the viewer is bought at an extreme price around 340 plus levels. So the best way to mitigate this is you use decent corrections to try and average out further. For example, the first point where you should be looking to average out should be around 315 mark for Nykaa, and then in case if the stock drops down to sub 300 levels, say potentially over the near term, that could be a very good point, because if you can bring your average price towards 315, 320 broadly, then I think you stand a very good chance to gain from the medium to long term trends for Nykaa.
All right, so you need to average at 315 or 300 levels if you get. Sharmila, what would you recommend?
I would recommend a hold. Overall, I'm very positive on all these stocks, which are sort of fashion facing and where people are buying online. So whether it's a trend, whether it's a Nykaa, I would say even add something like an Eternal to it because of the Blinkit venture, etc. Because I think a lot of shopping is the way people shop is changing. We are seeing, for instance, companies like a Nykaa being, in the sort of tier 1, tier 2 cities, but their spread is now widening. They are getting deeper into pockets. They are looking at more fashion, both for men as, they were already looking at fashion for women, but they're looking at fashion for men, cosmetics for men, etc. So they are also expanding the kind of products that they have. So I think if you have patience, to my mind, these are the stocks that one should stay invested in.
All right. So I hope that answers your question, Janendra. But we move on now to another query that's coming on WhatsApp. And the stock name is Titan. The quantity is 300 shares. Entry price is 3,840. Wants to know, should I hold or sell? Well, Sharmila, in the long term, what is your view on this stock? Of course, the firm has been having some downward pressure since yesterday, but largely he's sitting on a tidy bit of profit, really.
So once again, I'm positive on this kind of a consumption play. Definitely, I think what we really did see was that jewelry became a big part of Titan's business, and with the wedding season around the corner, etc., I think it makes a lot of sense to stay invested in Titan, because what we've really seen in the Indian context is that irrespective of what other expenses you cut, if things go down, you will still allocate a certain amount of money to buying gold and jewelry, because whether it's a sort of an emotional thing with Indians. So I don't really see people cutting budgets there. That is, I think, a big plus. And I think even in where watches are concerned and the other part of the business is concerned, a watch is now a fashion accessory. You are no longer buying a watch, to tell time. And we have seen a resurgence even in that business, whether it is eyewear, whether it is watches, etc. So to my mind, again, Titan is a definite hold.
What's your view on that? He wants to know, should he sell and book some profits?
I would recommend so. I would recommend to start looking at booking profits. So my only concern for Titan on the long-term chart specifically is that on the quarterly basis, the last 3 or 4 attempts the stock has made towards a new high. Every time the stock has done it, it's formed a lower highs on the RSIs on the quarterly charts. That generally indicates that we are looking at a point where maybe the stock could come back into a saturation phase, or maybe some sort of a correction over the near to medium term. So I would suggest that since you've bought at prices around 3,800 levels for Titan, it's a good start. It's a good price where you can start to look at booking profits. Maybe book 50% profits at current levels, and then in case if the stock consistently makes a fresh, minor high, say 5,200, 5,500 mark, that's a point where I would suggest to look at booking or full profits.
Okay, let's move on. This is Anthony's question from Chennai. Tata Capital is the stock. Entry price is 306 and want to sell it and move to HDFC Bank. Kunal, would you recommend this strategy?
No, as I said, HDFC Bank, for example, is a stock which is on the verge of probably starting a trend on the downside, because on the quarterly charts, the stock has hit a major low in terms of an RSI, and that could probably trigger some bit of more correction over the medium to long term. So I would probably be a little watchful for HDFC Bank. Tata Capital, on the other hand, I would be actually very bullish on the stock on the medium term time scale. Of course, the chart history is limited for Tata Capitals, but given the scope of the last 8-9 months approximately for the chart pattern, I would sense that the stock could see a much more higher high from the current levels. I'll suggest a hold on Tata Cap.
All right. On that note, We're going to be taking a very short break, but when we come back, we'll be taking more of your queries. So do stay with Kavita and me on 80 Now.
Welcome back. You're watching Buy Now, Sell Now. We're answering your stock-specific question, and we're joined by a live viewer. This is Mr. Kamal Karmakar from West Bengal. Hi, good morning. How are you?
Fine.
Thank you so much for sending us your question. Our experts can hear you. You can ask away.
I have two queries.
Okay.
One vintage coffee and another is Vikran Engineering.
Okay. It's you don't have anything on ITC?
That is also my holding stock, ITC
Okay.
Hotel,
Okay. The entry price, can I confirm? It's 120?
120.
Okay. What are the other two stocks that you mentioned?
Vintage coffee, that is also 120, 26 quantity, and another is Vikran Engineering, 50
Okay.
rupees.
Vikran Engineering is at what? What-
Vikran, Vikran,
Yeah.
Vikran,
What's the buy price?
50 rupees, 26 quantity.
Got it. And your view is for how many months or for how long?
3 to 5 years, long-term investor.
Okay, 3 to 5 years. All right, Sharmila, let's take a view from.
Until or unless 2030.
Okay, got it. It's an investment horizon. Okay. Sharmila, I'll come to you. Let's talk about ITC Hotels. 120 is his buy price, and he's planning to hold it for long term.
This stock I like. I think overall hotel stocks are stocks that I like, and they have properties in fairly good places. At this price point, the valuations also look reasonable, so it's a hold.
Got it. Okay, so that's a take on ITC Hotel. What about Vikran?
Vikram Engineering, honestly, I have never really tracked it, but I'm neutral on this. The numbers and valuations are not really giving any indication. So I think it might be best to sell.
What would be your take on Vikran Engineering?
See, I think I'll agree, Vikran. I think you should look to exit. The stock is weak on the charts. The other two names I think you have was ITC Hotels. I would recommend a hold on ITC Hotels. I think it's a good stock to hold on to, specifically given the correction the stock has already seen the last, I think, 1.5 odd year, and the potential upside the stock could see over the next 6 months, 1 year at least, in my time frame. And Vintage Coffee was the other stock. I would suggest that that's also a decent stock to hold on to, since if you purchase at lower levels, the stock currently is at 150. I would suggest to look at least 180, 185 as a modest target for Vintage Coffee.
All right, let's now go across to another WhatsApp query that we've got now. This is Dikshita, and she really wants a broad sort of a view, fundamental as well technical, on Wipro and ICICI Bank. So one from the IT pack, one from the banking pack. If I could come to you on this one, Sharmila, first, what's your sense on both stocks?
So I was just thinking that this is in a sense a little strange query for me, because you have one stock which is my least favorite in the IT space, that's Wipro, and I think it's on its way to exit one of the major indexes. And ICICI Bank, on the other hand, which is sort of a favorite within the banking space. So I think that says it all for me. ICICI Bank is a hold. For Wipro, I think you should shift out to some other place.
What would you recommend if she wants to shift out, Sharmila?
Yeah, so I mean, very honestly, IT is not my favorite sector at the moment, but I think, Kunal likes it quite a bit. Maybe you could take a stock from him. I would really recommend that you switch over entirely to ICICI Bank or some other play. I think, we've spoken of a lot of defensives, auto plays, etc., but I would not stay invested in IT.
All right, so Sharmila, of course, pretty firm on that one as far as IT is concerned. Kunal, what's your sense on both stocks, and anything that you'd recommend for a switchover?
See, I'll agree with Sharmila over here. My view will also be the similar, for both Wipro as well as for ICICI Bank. Wipro, I think it's a good time where you can look to exit and then move on to the better part of the the IT names. Maybe I think you can look at large cap. If you want to stick to large cap, you can go with Infosys or TCS at the current juncture. I think both of these stocks are placed quite well. Even HCL Tech, I think, has been a stark, distinct performer, I would say, compared to the other two larger cap names. So you might want to consider one out of the three names in terms of price performance. ICICI Bank, I'll continue to be bullish on, even though I think the stock is going through a very rough patch right now because of the concerns across the private sector banking names. But I believe that the larger trend for ICICI Bank is still extremely bullish. And whenever the private sector banking cycle starts off, there is a very strong likelihood that ICICI Bank could be amongst the best two leader stocks in the sector. So I'll suggest a hold on ICICI Bank.
All right, let's move on. This question is coming in from Mr. T. Ganeshan from Chennai, and stock is Bajaj Housing Finance. Entry price is 75, and he is ready to hold it for a longer period. Time frame that he is talking about is almost 2 years, and he wants to know the future if he holds it for 2 years. Sharmila, would you like to go?
Yes, I think it's a hold for me. Overall, I like real estate as a play, and within that, I think the housing finance companies, I think Bajaj Housing Finance companies, the kind of markets it's targeting, as well as the valuation of the company make it a hold for me.
Oh, okay, another question coming in from Bengaluru now. This is Vignesh, and he has a query around Narayana Ridale. Wants to know whether he should hold it for the long term, and should I wait for further dips? Sharmila, so that's another long-term view coming in for that one. Wants to enter.
So once again, the hospital play is a play I like. So for me, Narayana Ridale remains a hold.
Okay, the next question is Avnish from Katak. Eternal is the query on. Entry price is 308, and he wants a short to medium term view. Kunal.
I would be bullish on Eternal. I would suggest the buy at the current levels. And in case, just remember this point that the stock is a little bit high beta. So there are points where the stock suddenly goes into like a 20-30 point correction. So you'll have to keep some powder dry in case you want to average out at lower levels. Say, for example, 290, 295 could be a good point in case the stock drifts down suddenly to that kind of a price point. It's a good point where you can look to average out. But yeah, I think from a short to medium term perspective, I'll suggest a buy at the current levels. My targets, which I would suggest potentially for the next 3 months, 6 months, would be in the tune of 340, 350 for Eternal.
All right, the next question coming in from Hyderabad. Vara Prasad is writing in. The stock in focus here is Tata Tech, holding a quantity of 250. The entry price is 890. And the question is that Tata Tech, he's holding for more than 2 years. Please advise if I should hold or sell. So, Sharmila, what's your view on that one?
No, I'm going to take Kunal's advice on this because I'm in the same boat. I've been also holding Tata Tech because I liked it as a stock, and it's not done too well from there. So maybe Kunal can advise both of us.
All right. So, Kunal, what's your advice to both of them?
See, I think I would recommend a hold as well as a buy on Tata Tech even at current levels. I've been bullish on the stock over the last, I think, 2-3 months, and specifically at a point when the stock had been hugely oversold. There was a point when Tata Tech, I think, fell almost 50% or more from the listing highs. I think 1400 was the high for the stock, and had fallen down to sub 700 mark approximately. So I would suggest that the stock is at an inflection point. It's turning around. The long-term indicators, even though with a limited chart history, are starting to show signs of extreme bullishness. So I would suggest a hold on Tata Tech.
Okay. Next question is from Mr. Krishna Rao from Hyderabad. Wants to invest in Sona BLW for long term, and for that he wants a buy price. But should this be a long-term investment, Sharmila?
Yes, this is again, within, so overall autos is a play I like, and within that I think auto ancillaries is also something that, I think will play sort of catch up with the main kind of valuations we've seen in auto stocks. So for me, this is a good stock to look for from an investment perspective.
Kunal, current price can one buy?
See, the ideal price would be around 740, 745, which is the breakout point for Sona Comstar, but I'm not sure whether the stock would reach that level immediately. Maybe I think given a scope of the next 1 to 3 months, there could be a chance you might see a 10% correction from the current juncture. So 740 is the price which I would suggest to buy. But in case if you're looking to hold on to this on a long-term basis, you can start maybe buying 25% of your expected quantity at the current levels, and then look to add on dips at the levels which I mentioned.
All right, Sharmila and Kunal, thank you very much, both of you, for joining us on Buy Now, Sell Now. Of course, Sharmila is very happy with some of the advice she's received as well from Kunal. Thank you. Well, we slip into a very short break here on the show. When we return, we bring you management commentary that is coming in the earnings season.
Hi, welcome back. Last leg of the show, we'll be talking to managements, and this time focus is on SKF India. We are joined by Mayank Kholani, who is the CFO. Mayank, hi, good morning, and welcome to the show. All right, so demergers, one-off were guided to normalize by end of current year. Can you quantify the remaining one-off drag in Q2 and Q3 and maybe give us a clean EBITDA number investors should track?
So, the EBITDA number for this quarter are clean. So, whatever demerger related costs or effects were there, that were taken into account in the last financial year. So, what you see now is a clean number.
All right. Also, now OEM is, as of now, 51% of sales versus 46%. So that was a quarter ago. Is this mix shift structural, or do you expect distribution to bounce back marginally in H2 FY27?
See, normally what we expect the distribution business to be around 20-22% range. Maybe some quarter on quarter you may see a slight gap. Like if you see last 2 quarters of the last financial year, there was a jump in OE sales because of GST reforms, right? So which led to the increase in mix of OE. But largely we expect distribution business to be around 28%.
Let's talk about wind that grew almost 91% quarter on quarter in Q4 FY26. Now, how lumpy is the segment, and what's the sustainable quarterly run rate for wind going forward now?
So if you see this quarter, we are looking at for full year basis. If you see, we expect a double-digit sales growth in terms of close to 20% range or upwards of that. That's what we expect on the sales growth. And similarly on EBITDA, if you see, our expectation on the year-wise, if you see, will be around 17% range.
All right, Mr. Kholani, also Pune Greenfield is 2 years away. In the interim, what is the revenue ceiling given the current capacity, and how much demand are you leaving on the table?
See, Pune Greenfield plant is not for SKF India. So that is for SKF Industrial, which is the demerged entity, right? While we are focusing on capex, we are doing capex of which we announced last year about 500 crores capex across our 3 facilities, Haridwar, Bangalore, and Pune. And we are focusing on increasing our capacity, and that will be completed by end of calendar year 2028, financial year 2028.
All right, localization is at 60%. Now, which product categories have the highest import dependency today, and what's the roadmap to get to 75% plus given the FX headwinds?
So see, we are already, if you look at our SKF India portfolio, our raw material or the materials component is close to, more than 80% localized, almost 80%. And in terms of finished goods, it's very less. The dependency on finished imported goods is very less. We are largely localized.
Okay, RPTs with the SKF group entities are a total of 4,900 crore rupees. How do you ensure arm's length pricing, and what is the risk if the parent changes transfer pricing terms?
See, the RPT, the large number of RPT, what you see today is primarily coming from the transactions with the demerged entity SKF Industrial. And this kind of structure will continue for a couple of years till FY28 when their new plant for the other entity comes up. And then it will obviously, because currently it's all in the same premises in Pune, their plant is also operating within the same premises. So that's where it is. And as far as the arm's length pricing is concerned, we are completely compliant with the guidelines, be it accounting guidelines or the tax guidelines, and follow exactly what is required to be done as per the rule. And our pricing is accordingly decided. And that same is reviewed by the auditors as well as the audit committee.
All right. What about a permanent appointment of the CFO? Is that being made, and how has the finance function been managed through the post-demerger integration?
I think probably you missed the announcement. I joined as the permanent CFO in May, so in which the announcement was made along with the financial results announcement for last quarter of the last financial year. So I joined around the mid of May last year as CFO for SKF India.
All right. Thank you very much for joining us, Mr. Hulani, and answering all those questions.
Thank you. Thanks.
All right, let's now move on to Big Mint. Now, we're tracking steel sector's key commodities. Now, Nishtha Mukherjee Sinha from Big Mint is joining us. And hi, Nishtha. First up, India is imposing a definitive anti-dumping duty on met coke imports for 5 years. How effective will this be in protecting domestic producers if imports continue to remain competitive?
Yes, very correctly pointed out that government has notified definitive anti-dumping duty on imports of low ash met coke, which is less than 18% ash, originating or exported from the 6 countries: Australia, China, Colombia, Indonesia, Japan, and Russia. This is against the the final determination that was concluded by the DGTR, which stated that yes, the dumped imports were causing material injury to the domestic industry. In H1 2026, we saw imports increasing very sharply in India, and in last couple of months, we have seen a bit slowdown because of higher prices. Going forward, we expect this to normalize.
All right, met coke imports, they have surged almost 44% year on year to 2.91 million ton in H1 current year 26. Now, despite trade protection, all of this has happened. Now, what is driving the continued preference for imported coke among steel makers?
So imports rose because of the imported material had better benefits both in terms of cost as well as quality over the domestic supply. Additionally, the higher hot metal production in India, the increased pig iron exports from India, and expanding Indonesian met coke capacity were the key factors which overall resulted in increase in import volumes to India. Just to go by numbers, India's hot metal production increased to 48.3 million tons in H1 2026 from 47.1 million tons in the corresponding period last year. Export demand increased sharply because it can be quantified from numbers that India's pig iron exports rose to 0.46 million tons in H1 from just 0.1 million tons in the same period last year. And most of the shipments were done to US, and US since continues to rely on imported pig iron. So imported met coke requirements fetched the benefits or under the advance authorization scheme, which overall resulted in increase in imports.
All right, Nishtha, now Indonesia's met coke shipments to India have jumped 165% to 2.09. And how sustainable really is Indonesia's dominance in this coke import market?
So Indonesia's met coke production is largely dominated by the Chinese investment enterprises, and we have seen significant increase in their output in last year also, which is being continued this year as well. So there have been rapid capacity additions in Indonesia and the coking coal resources that they have with low ash sulfur content. So that also makes suitable for blending and gives them advantages over it. And going forward, we expect Indonesia to strengthen its position further in the global met coke export market.
Domestic met coke production grew only 6% to 26.8 million ton compared to the much faster growth in the imports. Now, is domestic capacity and quality sufficient to replace imported material?
So the domestically produced ash content, which raises the blast furnace operating costs. On the other hand, if we talk about the imported met coke, so that remains a preferred source because of efficient blast furnace operations and consistent hot metal quality. So the competitiveness of Indonesian suppliers extends beyond scale, and Chinese operators have also developed advanced coal blending techniques using a wider range of coking coal grades, so, which also adds to the benefits and gives a wide range of offerings of met coke.
Okay, Nishta, thank you very much for joining us on ET Now. Well, with that, it is a wrap on Buy Now, Sell Now, and it's a goodbye from Kavita and me. But do stay with us on ET Now as we bring you a lot more on the other side.